Welcome to my channel. Thank you for joining me one more time. Guys, today I thought it's best for me to address the COVID-19 situation and to speak about investments during this time, because I've had a lot of people asking me questions in terms of which stocks to buy, what do I invest in. So I thought, let me do a video for everyone to, benefit from the knowledge and to know what is the best way forward when it comes to investing during this, uncertain time. So stay tuned, guys. That's our topic for today: COVID-19, investing within the market crash. So what is a market crash? Guys, a market crash is when the markets drop by a large percentage, and that percentage is mostly 40 to 60 to 80% over a short period of time. As we saw last week, that is currently what happened, and all because of COVID-19. So there's a lot of panic because of COVID-19. People don't know what the future holds. It's very uncertain. A lot of countries have shut down, so economically it's going to be a very tough ride. So because of that uncertainty, the markets will always be very volatile during that period. So that's currently what is happening, guys. The market is shaky. Markets hate uncertainty. So that always causes a market crash when there is a lot of uncertainty. We've had 4 market crashes in the last 100 years, guys. Our first market crash was the Wall Street crash of 1929. Those who did history will know it as the Great Depression. So another one is the Black Monday of 1987. And then we also had the dot-com crash. Dot-com crash was in the year 2000. And then the most recent was the financial crisis of 2008. Those were market crashes. What should you do during a market crash? First and foremost, guys, do not panic. Don't sell any of your current shares in the markets. Do not panic. A lot of people are selling shares, which is the wrong thing to do. They're mostly selling shares to buy new shares, which is so crazy. So do not sell your shares, and try not to invest new money in the stock market, because you never know how bad the fall is going to be. And to call the bottom of a fall is a very difficult skill to master. So try to avoid pouring new money into the markets. The thing that I would say you should do is hold your money in cash. So invest in more cash investments, as well as you could possibly buy gold. The reason why you would buy gold is because gold it maintains its value over time. And even though the markets crash and things go bad, gold will forever be on the rise. And because a lot of people know this, what happens is that once the market crashes, a lot of people start buying gold. They buy gold and they push the gold price up, making your investment in gold even much more lucrative. So that's why I would advise that you buy gold. Try not to buy gold miners. Try to buy gold ETFs. So that is what you should be doing in the markets. And the reason I also advise that you hold cash is that once things do turn around and the economy starts booming, you can start using that cash to buy cheap stocks. And then you watch those stocks as they go over their previous highs, and that will make you a lot of money. So that is what you should be doing during a market crash. Okay, guys, we've also included a question and answer section to the videos. So this is where I'm going to be answering your different questions that you do ask. So you can also leave a comment at the bottom, ask a question, and I'll make sure that I do touch on it on the next video. So we're also available on Twitter, on Facebook, and I do have a WhatsApp group, investments. So today I'm actually going to be answering questions that were given on that group. First question is by Teddy Prime. So Teddy Prime says, firstly, I'd want to know what to focus on investing to take advantage of the shutdown or lower shares, sell or buy more. Also, what do I expect in terms of waiting for procured shares to recover? So basically what Teddy wants to know is, how do you take advantage of what is currently happening in the markets? Do you buy more? Do you sell more? And as well as, what do you do, or what do you expect during that time while your shares are going to then increase again? So Teddy, first thing, the way you can take advantage is to basically know where to put your money, and that's in cash. So if you put your money in cash, you have to just be patient. Be patient to wait it out until the economy starts to recover. That's where you'll be buying shares that are very, very cheap. So you asked me, do you buy more? Do you sell more? You do nothing. You don't buy more shares. You don't sell any shares. You do nothing. You wait. This is when being patient actually counts in your favor. So you wait it out. You leave your money in cash. And I did say in the video, you can also buy gold, which is almost like cash, because money does come from gold originally before the gold standard fell. So that is question number one. And you also asked what to expect. I would say expect a lot of shares to drop, companies to go bankrupt. And yeah, things will go bad before they get good again. And then Matthews asked, what is the impact of technical recession and lockdown on tax-free investments? So tax-free investments, it basically depends on where your tax-free investment is held. If it's in cash, like at a bank, mostly you won't be impacted unless it's market linked. But most of the banks' interests are not market linked. So if it was in cash, that you won't have any implications. But if it was holding maybe ETFs, then it will decline. But remember, it's a paper decline. So you won't realize it until you do sell your tax-free investments. So if it was in ETFs, it will decline, but it will go back up again. So it all depends on where your tax-free investment is currently. And then Bomela asked, what is the post-COVID-19 effect on investment, and how can we prepare ourselves? So Bomela, things will boom. Things will go back up after COVID-19. There will be good news. Many new businesses will be springing about. A lot of people will be making money. Shares will be going up. Things will be good. So how do you prepare? Hold cash. Because when things are good, or when things start to go good, or when they start to recover, things will be very cheap. And you'll be using your cash to buy cheap stuff. So buy them cheap, wait and see them increase, and then, you realize a bigger paper profit. And then Kuziva asked, health practitioners estimate the virus is going to reach its peak in July. That's 3 months away. Will the market continue being volatile until then? That's a big yes. It will be very volatile. Every week, every day, there'll be news. Super volatile. Okay, what percentage of listed companies won't recover? Oh, if I could answer that, I'd be very rich. I won't know that. But it depends on how bad the crash gets. It might be a big percentage because of the shutdown and what it will do to the economy. It might be a small, a small percentage. So you're also saying, we're already hearing that Edcon won't reopen its stores. Edcon was suffering before COVID-19. So just like how COVID-19 they're saying it's killing people with pre-existing conditions, Edcon had a pre-existing condition. That is why it will not recover. And then Tabiso spoke about what shares can we buy now. Try not to buy any shares, guys. Avoid buying shares. Cash, maybe gold if you're going to understand how gold works, but cash, hold your money in cash. So guys, that is our episode today. Thank you for tuning in. I'll see you guys again next week. Cheers.